let's start with what the OPEC Plus did. It's cutting 100,000 barrels a day. Some say it's a small move, but it is about protecting prices instead of the balance in the market, correct?
I don't know. I think it's all ado about nothing. It's a statement that they could do something if they need to. 100,000 barrels a day does nothing. We've seen Brent go down and WTI go up. So there's been no impact on the oil market. I don't know whether the Saudis are happy about that or sad about that. But, they wanted to signal that they could do something if need be. There was nothing to do right now, and they basically did nothing. They cut 100,000 a day, and nobody will see that in the marketplace.
Where do you see prices going from here? Hedge fund bets are significantly higher.
Well, the hedge fund bets are kind of irrelevant at the moment. We're not seeing much in the speculative community. Liquidity is unbelievably low, both in terms of trading liquidity and in terms of investor liquidity and BCOM or long-term energy or commodity portfolios. So we're seeing a market that's torn between weakness on the one hand that's driven by lower economic growth, it's driven by higher supply, it's driven by demand really falling out completely from where people thought it was going to be. But there are a lot of potential bullish factors in the market, so it leaves the market in a bit of a limbo. We don't really know whether there's going to be a hurricane season. We don't know whether there are going to be dislocations of supply coming out of Iraq, coming out of Nigeria, coming out of Libya. We don't know what the dislocations on the market are going to be as Europe moves away almost completely from importing Russian crude by the end of this year. So there are a lot of potentially important bullish factors in the market. The one big bearish factor looming over the market is what's going to happen with the JCPOA agreement. Will we know in the next week or two whether the U.S. and Iran are coming back to an agreement leading to a 1 million plus barrel a day increase in oil? So we've got mixed signals. I say the bearish part of it is overwhelmingly more important at the moment than the bullish part of it, but we don't know how winter will go, and all we need is a really hefty Gulf of Mexico hurricane season that really will turn the market tighter.
Right. Now, I just want to get, you've outlined, Ed, pretty much all the major factors there involved. And if we could attach probabilities to that, say, on the Iran deal, would you say on balance that would be more important right now than just everything else and the tightness we're seeing pretty much everywhere else in this energy market?
We're seeing tightness in the global power system. There's no doubt about that. That's a combination of things that are happening before Russia-Ukraine. It's obviously a climate change impact across the planet. We've had drought in the Northern Hemisphere, the highest temperatures on record in the Northern Hemisphere. We don't have redundancy in the electricity grid. So electricity prices are high, and in Europe, they're unbelievably high because of the geopolitics surrounding Russia-Ukraine and the Russians' decision to drop Nord Stream flows to zero for however long they plan to do that. But the oil market is looking very different. We've had a 20 to 25% drop in oil prices since June. We're having more bearish factors on the oil market than we are in the gas market or on the electricity market. So we're having a big divide across the energy spectrum. I think one thing's for sure, the world is going to see tighter electricity markets for some time to come. Europe can't deal without Russian gas for 3 or 4 years before there are adequate replacements in the market. So we're going to see very high electricity prices impacting domestic politics in Europe and around the world. But on the oil market side, it's a very different picture. More inventory growth, all else equals, buttressed by the relatively rapid decline in global growth, the rapid decline in oil demand. The U.S. alone is down just about 2 million barrels a day this summer from where it was a summer ago. And that's a function of high prices impacting demand. So we're having these two different markets, and what happens in oil is going to be a function on the bearish side of Iran and, relatively speaking, even worse global growth, so a recession in the global markets, or interruption of supply coming from disruptions in Iraq, where domestic politics are not working out very well at the moment, in Nigeria, in Libya again. We have Russian production that could be questionable in terms of the investable proposition in Russia. And we really do have this, drop in demand. But the hurricane season is something to watch out for. And it's a kind of interesting phenomenon. The U.S. is important in a way that it has never been as a supplier in the market. Yeah, excuse me.
No, I was about to say, I mean, the hurricane season, it is what it is. When it comes, it comes. And what I wanted to ask you a little bit more, because, I mean, Europe seems to be in very big trouble. You're getting, I mean, for obvious reasons, politicians coming in. Liz Truss, she has her plan. European energy ministers are meeting later this week. What's the best case scenario, you think, in Europe for European consumers struggling with these prices?
The best case for consumers at the moment is really sad to say, is pulling back on consumption, conserving. They're doing it because high prices tend to do that. But there's no way that there can be a replacement of the lost Russian gas in Europe without there being phenomenal drop in demand from one factor or another. It's going to be on the growth side. We're seeing a drop in demand in energy-intensive industries. The zinc industry, zinc smelting has gone to zero in Europe. Aluminum production has gone down by about 70%. Steel is down. So we're seeing a very big impact on the European economy in the energy-intensive industries that can't do without that gas. And the consumer, might have some rebellion at the political level, which is a worrisome sign to look at for the next 3 months.
And we had John Kerry saying that Russia's weaponizing fuel when it shut down that, the Nord Stream pipeline. Might oil be the next commodity to be weaponized? And what impact would that have?
Oil is being weaponized, and we have to remember that it's a two-way street. It's not only being weaponized on the Russian side, but it's being weaponized by the Europeans. It's being weaponized by the West. The very idea that the G7 have of putting a price cap on oil is a weaponization of energy as an instrument of policy. Can they do this? This is going to be a very severe test. The sanctions imposed on Russia in terms of everything related to the oil sector, imports for supplies, exports that are being embargoed by Europe, by the United States, by Canada, by Japan. This is a weaponization that's happening, and it's happening on both sides. It's not a one-way street.